Say you bought a house that cost $200,000. If you closed in May with a 30-year fixed-rate mortgage when interest rates hit a rock-bottom 3.35%, putting 20% down, your monthly payment is $705. But if you waited till mid-June when interest rates jumped to 3.98%, the monthly payments for that same mortgage would be $762, an additional $57 per month. Why are mortgage interest rates rising? Interest rates are closely tied to the yield on 10-year Treasury notes. Treasuries have been hovering the past few years at historic lows. In 2012, it was 1.5%. By mid-June, it ticked up to a still very low 2.25%. Why are Treasuries rising? First, let's explore why Treasury yields and thus mortgage rates have been so low. You have to look no further than the Federal Reserve. It's been on a more than 3-year spending spree buying treasuries and mortgage-backed securities. This is how vast the Fed's assets have become, climbing to $3.4 trillion. When the Fed buys treasuries, its demand for them keeps the prices higher and therefore the yields lower. Interest rates come down as banks have more money to lend, and mortgage lenders are able to offer super cheap home loans because they can bundle them together, resell them as bonds to the Fed, and turn a quick profit. As WSJ's David Wessel puts it, like a junkie hooked on heroin, the market has become addicted to the Federal Reserve's $85 billion a month bond buying program. But with signs of improvement in the economy, investors are betting Uncle Sam's spending spree may soon come to an end. When will the Fed start weaning the economy off stimulus? The Fed Chairman Ben Bernanke has said the central bank's program called QE3 will continue until there's substantial improvement in the job market. He also said recently they will likely start to trim their bond purchases within the next few meetings. So should you rush out to buy a house now? Not necessarily. Mortgage rates are still super cheap. Historically, 30-year loans are usually 5.5% or higher, and most economists expect rates to stay well below that level for a long time to come. That's the short answer.